All right, man. We back with another one, man. We back with another one, man. So we did get some lovely price action. So in the beginning, we did get a little up and down, right? A little up, a little down, right? But after that, we actually got lovely price action. So I did trade this live, right? I got off the market literally around this time. So after this time, so what I'm doing is now what I have to do, I actually have to stay sitting here all the way actually to at least 11:30, 12 because I miss out on a lot of moves because I actually just hurry up and get up and just I'm ready to go because I'm expecting, right? If I be not expecting, but sometimes I be like, okay, you know what? We may have a low probability, so I get up and I just leave, and then when I come back, I see the price action. I'm like, God damn, why the hell didn't I just stay, right? Anyway, so let's break down the price action. So we was already expecting, right, it to start manipulating lower to go higher, right? So if you look out here on a higher time frame, we're on a daily. We're delivering from this daily green fair value gap, right? So we ran away. So we have all-time highs up here. Obviously, we have equal highs. So this is obviously going to be a magnet. So let's break this down. So we see here at basically 2 in the morning, we came down and tapped the zone, literally right here at 2 in the morning. So I was literally not expecting it to come down there no more. I was literally just expecting a little small sweep. Because remember, if you're bullish, right? If you're bullish, remember, if you're bullish, you want to see it do what? You want to see it accumulate. So if you're bullish, you want to see it accumulate, 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 manipulate, right? Manipulate lower, right? Manipulating lower, which is the AMD model, sweeping out some lows, and then we get the distribution leg. So we get the accumulation leg here, which is just back and forth, and then you're looking for the manipulation leg down here, right? Freaking people out, thinking that we're going to go lower, and then this is the play that I like to engage in right here. This long, which is the distribution leg, right? So that's the AMD model. So that's what I was already expecting, right, from the morning shift. So let's delete all these zones right quick so we can get literally right into price action. Unfortunately, I wasn't able to capture this move because I got up and left, but it's okay because we can always, get better, right? So we got 9:30 open, right? It came down, sweeping out these lows right here at 8:16, right? We had news at 10 o'clock. So price, we actually created an SMT right here with this low, with this same low. We created an SMT divergence with ES and Q, right? And then you see it immediately ran up and took out this buy side that was right, that got generated literally right here. Boom. So then after that, we generated these new highs right here. So after that, we came back. So this purple zone is the first presented fair value gap. So it's the first presented fair value gap that got created after 9:30. Okay, so we come up, we come back down, we leave these highs. You see how we literally generate these highs right here. That's how I knew we want to come back multiple. So we got this little trend line liquidity, right? That's how I knew we was gonna come back. Anyways, we come back down, sweeping out this low. See, sweeping out this low right here. And then now, once we get all of the sweeps that we're looking for, we got all the manipulation. Now you're looking for proper bullish order flow. So we come up here, right? We get back above. So first of all, we have the inverse. The smaller the inverse, you see it closes above it. We have two literally inverses. But because this is the first presented fair value gap right here, I will be waiting for it to close outside of this purple zone, validating this, right, as now a bullish fair value gap, right? So I want to see it hold that support. So we close here, right? And then we come down. You see how we come down? We come down into this first change in the state right here. So we came down. You see the down close candle, aggressive close up, leaving a displacement leg, right? I'm using the wick. See, I'm using the wick and the opening price, which is the most sensitive part of the order block, right? From the opening price to the high wick, and you see how it comes into it, right? Respects it and leaves away, creating a new change in the state. So you see we create new change in the state right here. Create a new change in the state right here. Once we close right here, right? Then we come back down, retest this first presented fair value gap, also coupled with this breaker right here. I'm sorry, it's a breaker. Coupled with this order block, changing the state. And then after that, we get the rally above. So once we rally right here, now I was expecting it to come back to this breaker because we have a breaker right here. We have this low, high, lower low. So the moment it closes right above this line right here, this validates the breaker. So I was expecting it to come back into the breaker, right, which is the break and retest to go back long. But you see here, we left a fair value gap right here at the liquidity zone. So I was expecting these two fair value gaps right here to get used as a breakaway gap. So I'm not expecting it to come back to this breakaway gap because that's what you want to see when you're extremely bullish. When you're extremely bullish, you want to see it leave breakaway gaps, right? It's just how you see how it left once it got back above, it never came back down to this lower half. Same thing. Once it retested it, it never came back to this lower half, right? So I'm using the lower half of PD rates as breakaway gaps. So we have two fair value gaps that's coupled together. So I just on a higher time frame chart is only one. So that's why, and then there's another fair value gap above it, right, with a high wick. So that's what I use as my new support zone, right? So you see how it comes up right here, it comes up, comes right back down. Let me zoom in. See how it comes up, leave this fair value gap, coupled with this wick. You see how it comes right into the wick, expanding away. No candlestick closing. That's what you want to see. You want to see wicks in the lower half, right? You don't want to see no body candlestick close. Look at the closes. Look at the candlestick closures. It's in the upper. It's literally outside of the fair value gap, the inefficiency. Exactly what you want to see leaving. So we get another two down close candles, high wick, and you get an aggressive close right here. Displacement, right? This is what you want to see. Displacement away. Then you see how we come back. Respect the most important sensitive part of the order block. Yet again, is from the close to the high wick. Right? You see me extending. I'm extending this blue zone is literally only the wick. You see how every time it comes back into it, it respects it. See it comes back into this wick. So you see, look at the bodies. All of the bodies are in. Look at the bodies. All of the bodies. Candlestick closes are in the upper half. Look, upper half. Look at the wick, upper half. All of these upper half, upper half. Look at the wicks. The wicks are in the lower half, but the bodies are in the upper half. That's letting you know that you're aligned with order flow. Then we come up, create a bullish breaker, another bullish breaker, one of the high probability plays. Low, high, lower low, sweeping out this low, creating a higher high right here once we come into it. You see how once we actually close outside of the breaker, look how perfectly it literally comes right back and touch it. You see how perfectly it just comes right here. It don't even have the willingness to come into the inefficiency right here, leaving it as another breakaway in the upper half. That's how you know you're extremely bullish. Leaving it and just running all the way. You see, ran all the way to all-time highs. Wait, matter of fact, this was another buy side area. Sorry. It just the market literally just gave us perfect order flow and it just keep running. It just kept running and running and running and respecting everything. You see how it literally before I keep going, show that upper level. You see how it literally kept going. It touched the fair value, the bullish breaker, touched it, ran, and then like I said, look at this order flow. Look how perfectly this is a down close candles. Remember, you want to see down close candles support price higher. So once we create the change in the state right here with all of these candles that's right here, right? The moment we literally close above all of these candles, once we close above here, it validates all of these down close candles, right? So that's why the moment we close right here, you see how it comes in the upper half. You see how it never comes to this fair value gap, right? It's just leaving breakaways. And then this is another change in state right here. And rally, you see how I got the high wick. This is a fair value gap coupled with this wick. You see, same thing right here. accumulate. So remember I told you before, you're looking for the AMD model at all times. Not at all times, but it, when you're properly aligned with price, the AMD model would appear a lot, right? So we get the accumulation, 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 right? We're just generating orders, generating, then we manipulate lower, faking people out, then we get the distribution leg. All right, you get this all this accumulation zone, you get this accumulation, then you get this manipulation, right? Then you get the distribution leg, right? Just how we saw way down here. Price literally ran so perfectly after news. So that would happen. Sometimes when it's red folder news, sometimes it literally be waiting on the red folder news, right? Because that starts the volatility, right? And you see we hit the change in the state right here. Just see how I'm using just only the wick. See the wick? Come back into it. Create. So once we get above these down close candles, see right here, validating this change in the state side comes right into the line. Leaves it because of fair value gap, respect, respect. And this was all time highs. So then we got this was all time highs right here. This zone. All time highs. So as you see here, it ran up so much. So let's see how much points that is. Literally ran up 300 points with perfect order flow, right? Perfect order flow. All it was doing was waiting till 9:30. I mean, all we were doing was waiting till after news was at 10. So we get the back and forth, back and forth, back and forth, sweeping out this liquidity sell side right here, generate these highs. It's 9:50. We get the macro. Right after the macro, that's when we started actually getting good proper order flow. Sweep came up, respected the first position fair value gap. We tested this change in the state right here, expanding up, test the first position fair value gap one more time, rally, leaving breakaways beneath us, come up, respect this BISI, come back up, respect this change in the state, aka order block. This is just the wick. See how it respects the wick, respect the wick, respect the wicks, respecting only this wick. Right, accumulation. This is when it kind of like tires you out of the market. So sometimes price will tire you out of the market, and it makes you just get out early. Right, that's what it do. Comes back. You see how right before it goes really all the way up, it has to go down first. So I'm saying because the market has to do these four things at all times: generate the liquidity, then hunt the liquidity, then pull back to equilibrium of the range, or pull back to an inefficiency, which are fair value gaps. Then we create that bullish breaker. Low, high, lower, low, higher, high. Bam. Then you get the retest. And you see we get that rally again. Then you see we get that rally again. See? Before it goes lower, before it goes higher, before it goes keep going high. Because remember, it can't just go up and up and up. It have to go back down, take out this money, the liquidity, and then go higher to gain people to think we're going to go lower. Get all that liquidity. We just keep going higher. Right, respecting these down close candles. I respect, boom, respect the wick, respect the inefficiencies. TP. Well, not TP. I like saying TP, but it's just target hit when I mean to say TP. So, unfortunately, I wasn't able to catch a trade. I think I only caught one trade this whole week. And like I said, last week we had a negative month. I'm sorry, last week we had a negative. Last week we had a negative week, and then last month we had a negative month. So we trying to make these next 30 days, these next 3 months, basically profitable. So running down, I think I'm only down like a couple of maybe like 1 or 2 thousand for the year. So that's pretty good. So anyways, that's it. Broke down all of today's price action. I appreciate y'all for tuning in. I do trade live on YouTube, and I do have a free Discord. And if you made it this far, just write one into the comments to let me know that you made it this far. And if you write one into the comments, and if you need any help, right, when you write one, I will respond and give you a free one-on-one helping you with whatever you need help with, because I know sometimes it may be hard doing it on your own. So if you made it this far to the 14, 15-minute mark, just write one into the chat, into the YouTube, into wherever you see this, and then I will comment and give you a free, quick little one-on-one helping you with whatever you need help with. So I appreciate y'all for tuning in. I will be trading tomorrow morning live on YouTube and with my community on my Discord. So I'm not gonna get off the market early no more. I have to literally, no matter what happens, if we have buy at price action, good price action, I have to stay all the way at least until 11, to that last macro at 10:50 to 11:10. Appreciate y'all for tuning in. Let's get it, man.